When we think of EVs in India, the first company which comes to our mind is, of course, Ola Electric, with all the news clippings about customers burning their vehicles, long service wait queues, and its myriad issues. It is also infamous for making losses. Followed by Ola, what comes to our mind is Tata Motors with its Nexon and Tiago and range of EVs. Then comes Ather, and more recently, MG Motors, Mahindra, and Honda Activa have launched their vehicles, and they were in the news. But what if I tell you that there is a niche player in the EV vehicle space, which is not only growing at almost 100% per annum, but is also profitable and also has a clear revenue growth runway for the next 2 years? Yes, we are talking about a company called Olectra Greentech today. So, in this video, what we will look at is one, we will try and simplify the business model of Olectra Greentech. Two, we will have a quick look at the overall market and the government's focus on this space. Three, we will analyze the strengths and weaknesses of the company. And four, we will do a quick financial analysis of the company. Five, we will try and estimate what the next few years will look like. And finally, we will end with my thoughts on the company. So, without much delay, let's quickly dive in. Those of you living in metros must have seen Olectra electric buses already. Those who are living outside metros might not have seen it. Olectra is a niche player who entered the electric vehicle space but focused on electric vehicles and now tippers. It got into this space in technical collaboration with BYD. BYD is the largest manufacturer of electric commercial vehicles in the world. Why did Olectra Greentech enter into the commercial electric buses space and not the passenger vehicle or the two-wheeler space? What are the benefits of doing this? Well, there are a couple of benefits which I can see. One, the product value, the value per product is much higher, with an average Olectra Greentech electric bus costing 1.5 crores as against a lakh and a half for an electric two-wheeler, and anywhere between 10 and 20 lakhs for an electric car. So the ticket size is much higher. Secondly, you as a consumer would not have seen any advertisement from Olectra Greentech ever. That's because its primary focus and customer base is public transport utilities of the country. Whether it is Bombay, whether it is Indore, whether it is Pune, whether it is Nasik, whether it is Delhi, whether it is Bangalore. So all the municipal corporations and their transport utilities are its customers. So essentially, it has to participate in tenders after qualifying through the technical rounds. And that's how it gets its business. So zero spend on marketing is the other benefit. The third benefit which I see is, since it's a niche business, the competition is that much lower. Olectra Greentech's primary competitors today include Tata Motors, Ashok Leyland, who have their own ventures in the electric bus space, but they're not really focused on that as a product. That's one of their many products which they do. Whereas Olectra Greentech is absolutely focused on that. So the three benefits which Olectra derives is one, higher ticket size, two, zero marketing cost, and three, very less competition. So that's great for any business. And yes, I believe it's a very good strategy on part of Olectra Green. So what is the business model of Olectra Green? Olectra Greentech originally started as a manufacturer of composite insulators. That still remains a small part of the business, but today 95% of the business is bus manufacturing, electric bus manufacturing. So for all practical purposes, I am considering Olectra Greentech as a pure play electric bus manufacturing company. I will ignore composite insulator business for the time being, because the absolute numbers, whether it's contribution to revenue or profits, is getting smaller by the day. So in electric buses, it is one of the largest producers of electric buses in the country today. Its technical collaboration with BYD is a great enabler in this. BYD, as discussed earlier, happens to be the largest manufacturer of electric buses in the world, and its primary customers remain the state utilities, the state transport utilities, and the city transport utilities. So a B2B business rather than a B2C business. So that's the business model: simple manufacturing of buses, selling it to state utilities, and ensuring that it's maintained for the life of the bus. Now we have seen the business model, it's a simple business model. Let's look at what the market is and how we believe it will evolve. We'll have to look at market opportunity from a couple of different perspectives. One, we will look at how the EV bus market itself is evolving in India and the world. And we will also compare the EV bus market with the EV two-wheeler and the EV four-wheeler market's growth in the country. Let's take the EV bus market across the world first. If we talk about the world, Europe has about a 30% electric bus fleet within its public transport utilities. China has anywhere between 60 and 100% depending on the municipal corporation, the city as such. Some cities have even a 100% electric bus fleet. So what we can see from this very, very clearly is that if the same trend unfolds in the country, in India today, then India will also have anywhere between a 30 to 45% electric bus fleet within its public transport in the next 4 to 5 years. I pulled out some data from Siam. Currently, that number stands at less than 1%. So yes, there is enough headroom from growth from an electric vehicle bus penetration perspective if what's happening across the world is going to unfold in India also. Now, the electric two-wheeler and electric four-wheeler story is a little mature in India today. How is that unfolding? And can we see some trends? Can we derive some trends out of that growth? Maybe that may give us some indication in terms of how the electric buses will go. If you pull out the data, the electric two-wheeler market, which was a minuscule, which was next to nothing 6 years back, currently stands at close to 2.5% market share. If you see the trajectory, it's literally an exponential growth trajectory. Same goes for the electric four-wheeler market also. Of course, the four-wheeler market is primarily driven by Tata. What is the government's focus? The Indian government wants to have at least 25% of its vehicle population as electric by 2030. So yes, what we can see is what's happening across the world is expected to happen in our country also. Whether it's going to happen by 2030, which is 6 years away, or it may take a year here and there, that's the only factor which I believe is there. So the biggest risk which I see in EV vehicles is the limitation of the battery capacity and the battery production as such across the world, because that resource is limited and fully controlled by China today. So if batteries are not available, then electric vehicles cannot grow. It's as simple as that. A minor risk also will be alternate technologies like hydrogen fuel cell, which though it's a 45-year-old technology, but it's again gaining prominence now. So that's the market. It will grow. I can see it growing. I can see it growing exponentially for Olectra Greentech also. Olectra is a niche electric vehicle manufacturer with no baggage in terms of manufacturing other diesel and CNG vehicles. Whereas Tata Motors, Ashok Leyland are producing all kinds of vehicles. So Electra Greentech definitely has an advantage as far as the focus goes. The traditional car manufacturers manufacture all kinds of powertrains. Tesla focuses only on electric. So it can, put more and more resources and energy in one direction rather than spreading it thin across multiple directions. Same goes for Olectra Greentech. Now we have looked at the business model and we have looked at the market and the government's focus where it's expected to grow. Let's look at the strengths and weaknesses of Olectra Greentech. Olectra Greentech absolutely has an early mover advantage, along with the fact that it has world's largest producer of electric buses as its technology partner. Both of them gives it a tremendous advantage. It is also aided by the government focus on electrification of its fleet, of its bus fleet. The demand portion is also very, certain to happen. Weaknesses, what are the weaknesses today? The primary weakness remains that its business is dependent on government focus and expansion of electric vehicles. Its primary customer, directly or indirectly, is the government. If the government focus moves away from electric buses, then the revenue growth will be impacted. Second weakness can be intensified competition. Both Tata Motors and Ashok Leyland are formidable commercial vehicle players. Can they get their electric vehicle strategy right in buses? Uh, Tata Motors is already the largest electric car manufacturer in the country. Can it repeat the same performance in buses? Well, there is a very high chance. But again, with the kind of market growth which is expected in this particular segment of electric buses, I believe there is enough and more space for three and even maybe five players to coexist and grow for at least the next 5 years. So those are the two major threats. One is the government dependency, and second is the competition. There is really no third kind of threat as such. The battery tech is getting cheaper by the day. The batteries are getting cheaper by the day, so the prices of the buses are getting more competitive by the day. Now let's quickly look at what the financials look like. Today we are on 30th of November 2024. As of today, the company has a market cap of 13,000 crores with a stock P of 117. Oh, that's expensive. Stock P of 117 is an expensive number. Then the industry PE, which is the commercial vehicle industry as such, the automotive industry as such, is operating at a PE of 19.4 and 20 levels. But is the PE justified? Is the aggressive valuation justified? We'll come to it in some time. As discussed earlier, the company has been growing its sales fantastically. The CAGR of sales growth has been 60% over the last 3 years, with sales doubling from a level of 593 crores in 22 of March 22 to a level of 1154 crores in March of 24. That's almost doubling sales in 2 years. It has been profitable for some time now, with the current year's profit, March 24's profit coming in at net profit coming in at 80 crores on a turnover of 1154 crores. That's a net profit margin of close to 7.5%. Now that's fantastic when we consider that the only other pure play electric vehicle manufacturer in Ola Electric is making losses, and dramatic losses at that. So overall, is the company growing very well? It is. Now, is it profitable? It is. Is there any debt on the books? It's more or less a debt-free company. There is a little debt on books, about 200 crores, but that was primarily taken for expansion of its facilities, of its factory recently. It recently expanded its capacities to produce about 5,000 buses a year from about 1,200 buses, which was its earlier capacity. It's a relatively debt-free company. It is growing at a pace of 60% annually. It is a profitable company. The only thing which is a botheration is today the high P ratio. But let's quickly have a look at the management's forecast in terms of what the revenues will be for the next 2-3 years to understand if the market is giving it the high valuation because of a very high growth expected. It will be a very basic analysis, and a disclaimer: it is not an investment recommendation of any sort. Please do your own research before taking any such decision. So, as per the management, it will end up 2025 with an overall sale of 1,500 buses. 2026, they will end up at 2,500 buses. and 2027 they will end up at 5,000 buses sale. The average bus value being 1.5 crore, the expected revenue for 2025 will be 2,250 crores, which by the time 2027 comes in will jump to about 7,500 crores, which is close to a more than a 3x jump as compared to 2025 number. Now the PAT margin maintained today was 7.5%. As and when the scale grows or the volumes grow, PAT margin normally improves. EBITDA margin improves and economies of scale kick in, and consequently, as a result, PAT margins also improve. But let's assume that they will continue with the PAT margin of 7.5% over the same time frame. So in 2025, at a PAT margin of 7.5%, they will make a profit of close to 170 crores, which again is expected to, from a last year's PAT of 79 crores, it's almost doubling of its PAT. But where it really gets into an overdrive is the next 2 years. If it delivers 5,000 buses in 2027, the PAT margin will grow to a handsome 560 crores at the same level of 7.5%. Can we expect the PAT margins to improve with scale? Yes, we can, but let's assume let's assume that it will stay at the same level. What kind of P will you be comfortable with? Well, it's with this fast growing a company. At that point of time, I'll happily assign it a PE of close to 50. 30 is more my liking, but since it's growing fast and it's expected to continue to grow fast, I'll assign it a slightly higher number of 50. At a P of 50 and a PAT of 562 crores, its expected valuation in 2027 will be 28,000 crores. With the present market cap of 13,000 crores, it gives me a 2x valuation in a span of 2 years. That's a fantastic return to expect. Now, the question which you may ask is, we are talking about selling 2,500 buses next year and 5,000 buses next year. Where's the order book? Well, if you go through the reports and the annual results and the earnings call transcripts, Olectra Greentech already has a confirmed order book of 10,000 plus buses. So if it produces more efficiently, it can get its revenue numbers much higher even from the projected numbers. That's what I believe the future will look like. If I look at the overall market scenario, can I see the EV bus market growing? Yes. Does Electra have the order book supporting the expected growth for the next 2 years? Yes. Is the government focused on expanding its EV fleet? Yes. Is this expected growth which we are expecting in EV buses supported by empirical evidence in other similar sectors like EV two-wheelers and EV cars? Yes. How is the world EV fleet looking like in terms of the EV bus penetration? Well, Europe at 25%, China at 70 to 100%. That means yes, EV penetration is bound to go up. So overall, the way I see this is, it's a good business. It's a good order book. The only thing which can stop Olectra from growing is its execution capabilities. So what are your thoughts on Olectra Green? Do let me know in the comments below. Do like, do subscribe, and I'll see you in the next video.